Good evening, everybody, ladies and gentlemen. It's my pleasure to offer you all a nice warm welcome here on a lovely sunny evening again tonight. My name is David Moore. I'm the Managing Director of the Mortgage Division in NFP Ireland, and I'm very honoured here to host this evening, and it's great to see a full audience here tonight as well. We have a fantastic lineup of speakers tonight who will be sharing their expertise and insights with you all. Each of them have a very unique perspective and wealth of knowledge to offer, and I'm confident that you will find their presentations most engaging and extremely informative. I'm sure all of you will take away some tips and advice on navigating your own mortgage journey. And I call it a journey because that's exactly what it is. Buying a home is the single largest transaction you will ever do in your life. So it is important that most of you have done this for the very first time, that you rely on the advice of those who are here to assist you. From dealing with us to obtain your mortgage approval, from dealing with your solicitors, your surveyors and estate agents, we're here to help you and offer you professional advice and sound advice all along the way. So in other words, don't ever feel that you're alone in navigating this process, because it can obviously sometimes be quite daunting. So we're here to help. Firstly, I'm going to give you a brief guide on background to who NFP are. NFP are a US-based firm. Sorry, move on the slides there. We're a US-based firm with in five different countries: the United States, Canada, Puerto Rico, UK, and obviously more importantly Ireland. We've 7,000 employees worldwide, and we've over 450 of those working in both UK and Ireland. NFP have an annual revenue is over $2 billion, and we're one of the top 5 global brokers worldwide. We're one of Ireland's largest mortgage brokers. We've over 15 mortgage specialists, and most are here in the room this evening. So if you have any questions, they're more than happy to answer any questions after the event if you want to come up. Or alternatively, just feel free if you want to reach out to us and arrange a consultation, whether you're looking to buy in the immediate future or maybe something you're thinking of maybe the next 6 months, maybe 12 months. Just moving on, basically what we can do for you on the NFP mortgage journey. So we're a multi-agent broker, so basically we deal with every bank that's in the market, right? As I said, we're one of Ireland's largest mortgage brokers with over 30 plus years experience in the industry, and we offer impartial mortgage advice. We tailor the advice we give to your situation, your circumstances, okay? Researching the whole market, so you don't have to. That's what a mortgage broker actually does. So in other words, we do all the legwork, we'll do all the chasing for you, we'll be there to give you the advice on what fits you most in terms of product from the lenders. We'll research all the market, as I said, so review all applications prior to submission. So importantly, banks are getting more and more fussy with applications these days, and it is important that we run those cases by the banks before they go in, because it is very important the case is packaged correctly, and that's what we do day to day. So an application can be turned down because of insufficient information that you're supplying the lender, or sometimes you're giving the lender too much information. So in other words, we're there, we run cases by the banks all the time. So we have a very high hit rate. When we submit a case into the banks, like we'll be close to 99% in terms of hit rates in terms of mortgage approval. We have a paperless process. We have a mortgage portal that we do all our transactions through, so it's very, very easy. You're not having to print off and sign documents left, right and centre. You find elsewhere. So everything's done through DocuSign. It's a very easy process. We get a lot of good positive feedbacks from our clients that the portal is very, very easy to use. So it's one way we can actually simplify the process in terms of all the documentation the banks are looking for these days. In addition, we're from the financial advice, we've all the associated products that goes with mortgages, life and pensions, home insurance, etc. So we're basically a one-stop shop. And when you come to us, we're researching the market, not just in the bank lending, but also on the life insurance options for you, what is best price in the market, which is the best home insurance product as well, etc. So we're basically a one-stop shop for all. We have a dedicated back office admin team as well that will hold your hand throughout the whole process when it comes to mortgages. So these are the lenders we all deal with, which is Haven, which you might not recognise the branding and the name, but it's actually AIB. That's the broker channel for AIB. ICS Mortgages, the mortgage store is the Bank of Ireland, as you can see there. Finance Ireland, Avant Money and PTSB. There were two other lenders, as we all know, in the market last year, KBC and Ulster Bank, unfortunately have gone, which has obviously not helped in terms of competition. But there are 6 lenders still out there actively lending at the moment. So I'm just going to give you a quick overview of, a motivation why you're wanting to buy. So at the moment, there's less than 1,000 properties for rent in Ireland. It's only 500 in Dublin. And rent has been going up over the last number of years. Like, in fact, I think it's, according to Daft, it's actually increased by another 11% as of last year. So we're just giving you this bit of graph. The average, according to Daft, the average rent in Dublin now, even probably for one bed, is over £2,000 a month. So in terms of making your decision, if you're paying extortionate rent, which a lot of people in this room are probably paying way more than £2,000, that in terms of actually deciding to go for a mortgage, the repayments, even with the rates been rising, so you're looking at an average of right between 4 and 4.5, I'd say, with the recent rate rises, you're still looking at under like €1,500 per month versus what you'd be paying in rent in £2,000. So at the moment, it's almost immediate saving if you're deciding should it be good to go on the property ladder. If you're paying over that type of rent or over that at the moment, it's definitely worth looking into in terms of what you could save, even owning a property as well. So there's a lot of talk at the moment. The ECB has risen its rate again last couple of weeks, and it's due to probably go again. So, like, I've been in the business a long, long time. I can remember 1992, unfortunately, in terms of the rates and in terms of the history of the rates going. So this graph is actually very good because it gives you a big trajectory, and I'm sure there are people in this room who have parents talking about their interest rates being at 14, 15%, and as you can see there, coming out of the 80s into the 90s, they were. So you can see there's been a dramatic fall right up until 2000, and when the European Central Bank rate was 2%, the rates in Ireland were in around 4%, and they're hovering in around that now. So you can see where it spiked when we had the financial crash, the Celtic Tiger bust back in 2006, 2007, where the rates actually peaked up towards 6%. And since then, the ECB, the European Central Bank rate, has been dropping the rates. And they've been dropping the rates down to zero over probably the last 5 or 6 years. But obviously since last July, those rates have been creeping up. But it's in and around, you can see the average, even from 2010 up until, say, the last 13 years, it's kind of in and hovering around the 4% mark. Like the main driver for interest rate increases at the moment is inflation. We all know it's actually been a pain in the side for a lot of people out there at this moment in time. So we don't know, and we can't predict any magic ball that there is going to be a change in terms of the adaptation for the ECB increasing the rates. But markets are talking about maybe the interest rates tapering off before the end of the year, which will give a bit of confidence in terms of obviously mortgage repayments. We're seeing a lot more clients now, when they're picking banks, they're actually picking longer-term fixed rates. In fact, one of the banks, their Avant, will give you a fixed rate for the whole term of the mortgage. So you don't even have to worry what you see the rates in the market there, because you know what you're going to be paying for the full term of the mortgage. That's unique to only one of the banks that allow you to do that. Ultimately, if the rates do come down, people say, are they going to come back down to where they were over the last 5 or 6 years? The answer to that is probably not. The European Central Bank targets inflationary rate. In other words, the rate that they want to keep inflation at is 2%. So they were, in the 2000s and the noughties, had the ECB rate at 2%, and it increased due to the crash. So I'd say if the rates start to come down, which hopefully they will for everybody, I'd say they'll probably start levelling off at around 2%. I doubt very much that they'll go lower than they are at the moment. So you might see a drop in the interest rates over the next, maybe 4 or 5 years, but I don't think that's going to go drop what it has been over the last probably 2 to 3 years, which they've been ultimately quite low. Okay, so moving on, I'm going to introduce our first speaker, our first presenter for this evening, Emer Shannon. Emer is a senior mortgage advisor for NFP for the last 3 years. She has been working in the banking industry for the last 15 years, with previous roles within AIB and KBC Bank. Emer is more widely known in her social media circles as Miss Mortgages. With a loyal following in excess of 22,000 followers, growing by the day, Emer has kindly offered her to share her expertise in setting out the initial steps to start your very own mortgage journey. I'm sure we're looking forward to hearing what Emer has to say and sharing this evening. So, with that due, Emer, would you like to come up for a few minutes? Thank you. There you go.
Great, thanks very much. And following on from David, I just want to say thank you very much to you all for coming this evening. Buying your first home is such a huge undertaking. So whether you're at the very beginning of your mortgage journey or you have your approval in principle and are actively house hunting, I hope you find this evening useful. So I'm going to take you through the mortgage journey, beginning with getting mortgage ready. And if you do have any mortgage questions, if you'd like to note them down, and you can ask them to us all at the end during our panel Q&A session. So I suppose getting mortgage ready. First things first is figuring out your budget. And you're figuring out your overall budget so you can set realistic expectations for yourself from the get-go in terms of your borrowing potential and your buying power. So also then, I suppose following on from that, you will know then, if you know how much you can borrow, how much you need to be saving for the 6 months before you make your mortgage application. So, loan to income. As a first-time buyer, you can borrow up to 4 times your income. You can also, in I suppose a small number of cases, go up to around 4.5 times in exception cases. What I would say is, if you are relying on getting an exception, it would be very crucial to make sure to use a broker who has an agency with all of the lenders in the Irish market, so as not to put all your eggs in one basket. In terms of your income, 100% of your salary is going to be factored in, your basic guaranteed salary. If you have any additional income, we can have that factored in too. Variable income, though, is looked at slightly differently from the lenders. So what I would say here is to make sure to use a broker in this case, because the amount you can qualify for, especially if you have a large amount of variable income, can vary greatly between the lenders. From what you qualify for with Bank A compared to Bank B. In terms of your loan to value, the maximum loan to value is 90%. So this means that you will need a 10% deposit. Your deposit can be made up of many different sources, but primarily for first-time buyers, it is personal savings, parental gift, or inheritance. The government schemes, sale of shares, and so on. In terms of the government schemes, the two, I suppose, most commonly used government schemes at the moment would be the Help to Buy and the First Home Scheme. The Help to Buy is basically a tax refund of the income and dirt tax that you have paid over the previous 4 years. The maximum amount that you can claim back would be €30,000. However, the maximum that you will get will be the lesser of the €30,000, 10% of the purchase price, or the amount of income and dirt tax you have paid over the previous 4 years. So, if you're purchasing a property for €300,000, you qualify for the full €30,000, you could potentially get your full deposit through the Help to Buy. So then, like that as well, just in terms of the limitations around the Help to Buy, the property must be 500,000 or below, and your loan to value can be no lower than 70%. And unfortunately, there's no leeway around these rules. It's strictly 70% loan to value or above, and the property must be 500,000 or below. On that, and it is strictly for new builds or self builds. Following on then, the first home scheme is the same. It is strictly for new builds or self-builds as well. The first home scheme is the shared equity scheme, where the state and the participating banks pay. I suppose they're paying up to 30% of the cost of your property, of the property you're buying. Again, as I said, it is only for self-builds, and the two schemes can be interlinked. But if you are availing of the 10% from the Help to Buy, the maximum you can get from the first home scheme is going to be 20% of the purchase price there. With the first home scheme, there is limitations in terms of the value and the purchase price as well. So, for example, it does depend on where you're looking to buy. For example, if you're looking to buy in Dublin, the house can be no more than 475,000, and an apartment could be no more than 500,000 to qualify for this scheme. And then I suppose just to compare, in Kildare, if you're looking to buy a house or an apartment, it can't be any more than 425,000. If it is 430,000, you won't be qualified for the first home scheme there. I suppose like that. While we're on the topic of deposits, while I'm on the topic of deposits, apologies, and sorry if I seem a little bit nervous today. I am stuttering a bit, so just wanted to apologise for that. But while I am on the topic of deposits, you do also need to factor in not just, the 10% or whatever it might be. You also need to factor in the additional costs that come with purchasing a home. So you're going to obviously have your solicitor's fees, your stamp duty at 1% up to $1 million. And then your either a structural survey or if it's a second-hand home, and a snag if it's a new build, and the usual valuation and little bits like that. But they all just need to be accounted for as well. So then I suppose once you then obviously you have your deposit, and you have your deposit, you now need to. The most important thing is obviously showing the bank that you have the ability to repay the mortgage. So this is called your proven repayment capacity or your proven repayment ability, and basically it's just demonstrating to them that you have the ability and I suppose the sense to make these mortgage repayments. So what the banks do is they will stress the mortgage at 2% above the current rate. So ideally you will be proving for the 6 months before you make your mortgage application that you can meet the stressed repayment. And in the current environment, I suppose it's more important than ever for your own sake to be meeting this stressed repayment, because the reason they are stressing this repayment is to make sure that you would be able to meet the repayment in the future if rates were to rise. So it's for your own sake as well as the banks that you are able to demonstrate that you can meet these repayments. And then I suppose along with this, you do obviously also need to make sure that your accounts are in good order. And by good account management, I mean, for the 6 months before making your application, just that, you're meeting all direct debits that you have, that you're not going into an unauthorised overdraft. There's no excessive gambling on the account. And yeah, basically just that's it. And I suppose on that point as well, I commonly get questions around, is it okay if I buy too much, if I'm shopping on ASOS too much, if I'm, spending too much on takeaways, all these sorts of things. The lenders don't care what you're spending your money on once you are demonstrating that you have the ability to repay the mortgage and the sense to do that each month. So once you have figured out how much you need to be saving, or through rent, so your proven repayment capacity can be demonstrated through obviously various different things, obviously like rent, savings, a loan finishing up, or ABCs. But once you have demonstrated to them that you can meet the mortgage repayment through all of these, it doesn't make a difference what you spend your money on. Once, as I said, it's not like excessive gambling. So then obviously as well, what I would say is if you have had any credit issues in the past, or you feel like maybe it was a student loan or a student credit card, just if you feel like there could be anything there, just make sure to request a copy of your credit report on the Central Credit Register. And you can provide this to your advisor up front, because if it is covered off up front, it can avoid so much hassle down the line. It could be the difference between the application being approved or declined being approved or declined by declaring it up front. So just make sure to provide that with to your provider if you do think that there has been any issues previously. So once you have your deposit sorted, you have your proven repayment capacity for the last 6 months, your accounts are in good order, and all of those things, I suppose the next step would be making your mortgage application. So the documents, I suppose, that you're going to need for your mortgage application are, for your income, you're going to need a salary cert and 3 months pay slips. And your EDS, so your employment details summary, which was previously the P60. Just to note here, if you do have variable income that you want to be factored in, make sure you provide 3 years worth of EDSs, so your employment details summary, and the pay slips from the time of receiving, say the bonus. So by variable income, I mean maybe a bonus or commission or overtime. So just a pay slip from the previous years too, if possible. For self, that's for PAYE. For self-employed, you're going to need to provide 2 to 3 years tax returns, so your Chapter 4 and Form 11, and they will take the average of this for working out your income. You will also need to provide a tax clearance certificate and your 2 to 3 years audited accounts, along with your business current accounts would be the only other difference there. In terms of statements for everyone, we will need 6 months statements for all accounts you have. So Revolut, N26, obviously your current accounts, your credit cards, loans, everything. And then other than that, then we will just need, your ID. So front and back of your driver's license or a clear copy of your passport with, nothing missing. And your address ID can obviously be a utility bill or your bank statement if it matches up to where you're living now. There is obviously other ad hoc items that you will need, and it's at this point where you'll be having your consultation with your mortgage advisor, and they will go through those different things with you. So obviously if you are getting a gift and you have that gift letter up front, that would be great to provide at this point too. Or say, for example, if you are a contract employee, you will need to provide, obviously, along with your salary cert and all of the other items, you will also need to provide a copy of your CV and obviously a copy of your contract as well. So your mortgage advisor will obviously go through all of these ad hoc different things that you might need as well. And just, I suppose, as well, just to note before moving on, when it comes to repayment capacity, because it is something that everyone is really zoning in on now, and especially with interest rates rising, it is something that you do want to be very cautious of, because if you're meeting a stress repayment now and the interest rate does rise, if you need to go for a reapproval, you may no longer be meeting the level that you need to for the proposed mortgage. So I would just be saying, obviously you need to, it needs to be realistic and, manageable amount that you're saving, or, rent or whatever you're using for your repayment capacity, but just to make sure that it is as much as you can, for your own sake, I suppose, more so than anyone's. And then, like that, I suppose, once you have all your documents, I suppose technically your hard work should be done. That should be the hardest work for you, if you can, for now. In terms of it, once you make sure that you provide a full 6 months, it's just going to make the journey for you a lot more seamless, because we won't be going back and forth looking for additional documents. You'll find you'll get your approval much quicker as well. So once your advisor has all of the documents, it's their job then now to move on and get you your approval in principle. So obviously you will arrange a consultation, and they'll go through all of your different options with you specific to your case, discussing, for example, what you qualify for with Bank A versus Bank B and so on, the interest rate or the offering of Bank A versus Bank B and so on again. And together you will decide on which is the most suitable lender for you at this point in time. And obviously your mortgage advisor will then proceed. And, we wouldn't be submitting an application in unless we were expecting an approval in principle. So the next step obviously would be your AIP issuing. So your AIP is your AIP is basically confirmation from the chosen lender that you are mortgage approved. At the moment, it is still common that estate agents aren't even allowing you to view some properties. Now, some will without an AIP. We definitely need your approval in principle to bid. So it is, I suppose, advisable to get your approval in principle as soon as possible when you're looking around. Just so if you do see a property that you really like, that you don't miss out on it, and that you can get a bid in there before, I suppose, someone else does, or before you miss out in general. So at this point as well, I suppose, once you have your approval in principle, that's when the fun begins, and you will be searching for your property. Our next speaker, Liz, is going to cover that off in full and in a lot more detail, so I'm going to jump past that now. But all I will say is that your NFP mortgage advisor is going to be with you the whole way. So if you do have any queries at this point, you can always link in with them. If you need advice, if you need, I suppose, a hand with bidding, with speaking with an estate agent, we're well used to it, and we're linking in with estate agents on behalf of our clients, so don't be afraid to reach out at any point of the journey. So Liz will take you through the next part. So now you've found your property, you've gone sale agreed, and you will pay your booking deposit usually. Usually it's 5,000 to 10,000, and that is fully refundable at this point if, say, for example, either party was to pull out. At this point, it would be when you would start, I suppose, one, you'd want to know who your solicitor is going to be. You would need to instruct your structural survey if it's second-hand property. If it's a new build, it will be a snag that will be completed once it will be done once the property is completed. But you'd want to be getting your structural survey done just to make sure that the property is structurally sound and just to cover yourself really. Once you've got the structural survey, then basically what you need to do is move to your loan offer. So you will need to get a valuation usually up front with the chosen lender from a valuer on their panel. And obviously your approval in principle will also have some conditions on it. You will need to satisfy these conditions in order to move to loan offer. So once your valuation comes back in and all of your conditions you've confirmed to your solicitor we'll reconfirm the rate you're happy to go with, the term you're happy to go with, and all of that. It will be submitted back to the lender to be reviewed for loan offer. And loan offer is your formal approval from the bank based on the specific property. So the bank is obviously agreeing the term, the rate, that they're happy with the security as well, so the property that you've chosen. And this is basically the formal offer from the bank that you've got, the go ahead for the property. And like that, once your loan offer issues, this is usually when your solicitor, jumps in and where their work starts. And Damien is going to lead us through that. That's the legal side of things now later on as well. So I won't say too much on that there, other than at this point as well, there will be conditions on your loan offer that you will need to suffice from our end, such as your mortgage protection and your home insurance. Your NFP mortgage advisor will be able to speak you through all of that and go through all of the options in terms of the various life companies and the different offerings on the market as well, as we also deal with all the life companies on the market too. So they will lead you through that and show you all of your options there too. And once obviously you decide on, when you're meeting once your loan offer is issued, you are then able to sign your contracts. Up until your loan offer is issued, you wouldn't be able to sign your contracts. At this point, you will be obviously paying over the remainder of your initial deposit, which is at this point it will be legally binding because you're signing contracts, and that's why you need to make sure you have your loan offer before signing contracts. And like that, when you're meeting with your solicitor to sign contracts, they should be able to give you an idea from dealing with the vendor solicitor of when your expected closing date is, and then you would relay that to your mortgage advisor, and your mortgage advisor will be linking with your solicitor and any of the other stakeholders the whole time too as well, just to follow up and make sure that everything is in order for closing. And just on that point with solicitors, we do obviously always recommend shopping around, and obviously it's not just about, obviously everyone wants to get the best price, but you also want to make sure that you're getting someone that is going to be engaging with you, that's going to be easily contactable, that's going to get back to your queries. And to be honest, that is few and far between when it comes to solicitors, and we know because from our end we're chasing them down too. So when we say shop around, it's not just for the price, it's for someone who you think is going to be easy to work with throughout the process, because I know you've probably heard from people or friends that have gone through the process in the past, but the closing stages can be extremely stressful for people. So you do really want to be dealing with people that are going to fight your corner, that are going to keep you updated, and are going to, lead you through the whole journey, and just make it as enjoyable as possible. So once anyway, then, you've satisfied all of the conditions, you have your drawdown date. You're moving to drawdown. With the lenders, you do need to, it's not a case of you just submit in your last document, the funds are issued. They all have their own different processes, so it does obviously depend on who you're going with. But ideally what I was saying is you need to have, if you want to draw down on the Friday, ideally you would have all of your documents in and approved, signed off, okayed by the bank the Friday before, just to make sure that there's no issues when it comes to the following week. And like that, Damien will take you through that stage. This stage is a bit more as well. So I suppose really, then the next stage really is just, the nice part, getting your keys and all of that. So I'm going to pass it back over to David, and thank you very much for listening. And I'm really looking forward to hearing from our next two speakers too. So thank you.
Thank you very much, Emer. So I meant to say, just at the end of everyone speaking, we're going to have a Q&A. So any questions that you want to ask, we'll have a microphone going around the room, and you want to ask the questions, we'll have the guys who were speaking tonight up, and we have a few questions actually we've got in before the event this evening. We have a few questions we'll ask the panel, and then we'll open it up to anybody that wants to ask a question in the room. So our second presenter this evening almost needs no introduction. Liz was the first buyer's agent in Ireland, setting up her home business in 2002, and yes, it was location. Kirsty Allsop's in Channel 4 that inspired her. Despite having already an insane interest in property industry, advising her friends and family, actually this became her business. While looking at a house one gloomy December evening, a camera crew arrived to shoot at the house for the programme House Hunters. The producer spotted Liz and asked her to do a piece on camera. The following morning, she got the call to co-present House Hunters and House Hunters in the Sun. Both series followed House Hunters on their journey finding new homes, but didn't advise on negotiating on the bidding process. Fast forward 21 years, and Liz O'Kane, property buyer's agent, is still in business. My God, 21 years, and you still only look over 25. Liz is recently the presenter and advisor on Help Me Buy a Home at Virgin Media, which indeed guides and advises and educates a broad variety of clients on their home buying journeys with great success. We hope it returns to our screen soon, and there's definitely a need for the advice and guidance, hence why a lot of people are in the room this evening. We at NFB could not see a more perfect fit to advise our clients in terms of their home journey. So the biggest compliment Liz was given following the airing of the series is like you are like a counsellor for House Hunters, which she's very proud of. So please give a warm welcome to Liz O'Kane. Yeah. Put it down. Yeah. No problem.
Thank you very much.
No problem.
Hiya, folks. How's it going? Thank you very much for a fabulous introduction, which I wrote myself because I was asked it. That's my bio, lads. You know all about me now. So look, I just want to give you a little bit of background, I suppose, about me, how I came to be in this business, how the business has actually changed significantly since the last credit crunch and till today, where we are now highly regulated, and what I actually do, which is a huge amount of hand-holding every single day and reassuring people all the way. Emer kindly talked us through all of the stuff that you guys have to collate in the background that has nothing to do with me, right? But the bit at the end where it says move in, and the bit in the middle where you have to go to open viewings and walk around a house where there's 12 other people and suss each other out like it's psychological warfare and decide who's got money and who hasn't and how am I going to bid on this, is the horrible, anxious-ridden bit. But it's not scary for me because I'm doing it a very long time, with a few little blips along the way. So I started my first business, which was actually called Get Sorted, back in 2002 when my daughter was 3 weeks old. That just shows you about postpartum insanity, right? So I started the business, and at that time, the Irish property industry was not regulated. So any Joe Soap could be an estate agent. Anybody could say, hey, I can plonk a for sale sign in your front garden and I'll sell your gaff for you, right? I am a licensed estate agent now, and I do not sell anything. I do not plonk for sale signs into anybody's front garden. I do not stand in houses on a Saturday afternoon with 25 people wandering around who are all in a big, huge competition to hopefully purchase a property, bid on a property, and get to the end game. I act exclusively for the purchaser. There is no conflict of interest with me. I do not sell anything. I sell my services, clearly, but I do not sell property. Okay? So my clients are very wide and very varied. I currently have clients in Australia, Vancouver, Hong Kong, Saudi, Cork, Kerry, Mullingar, and I generally can handle 4 clients at a time with efficiency, okay? And other clients will wait in the background until I am free. My brand is my name, so it's difficult for me to scale up because my clients want to deal with me, right? And how I work is as follows. The phone generally rings when somebody has approval in principle and the approval in principle is about to run out and they're actually having a knicker fit. And they're going, oh, Jesus, we've had approval in principle now for 20 weeks. It's going to run out in 24 weeks. Is it predominantly a year now? 6 to 12 months. You see? So I get the 24 weeks ones. And they think, fantastic, we've got approval in principle. It means we can go shopping for a house now and all of that. And everybody relaxes a little bit. And then up comes the very close to the 24 weeks. And they get themselves into a panic. Or they're living overseas and they think that mum and dad are going to go tearing around the country for them looking at houses. And I can assure you, after the 3rd house, mum and dad have no interest. And neither do the siblings. And everybody is doing exactly the same thing, all of you. And if you guys in this room are considering, applying for a mortgage, or you may well already be approved in principle, you're all sitting up on your laptops in the bed at midnight, and you're all on Daft, and you're all on myhome.ie, and you close the laptop, and nothing has happened. And then you all go to work the next day for 8 to 10 hours, and you cannot make a phone call. You can't speak to estate agents, and you can't get the information that you're looking for. So when somebody calls me and says, oh, I think I need your services. What do you do? So, it's really very simple. I'm the gopher. If you want to retain me or you want to engage with any buyer's agent, you are asking them to be your eyes and ears on the street. That's what you're asking for. So any client or potential client could have a chat with me and they'll say, we've got €400,000 to spend and we want to live in Ranelagh. And I go, well, that's not going to happen. That's not happening today, it's not happening next week. So based on anybody's budget, their criteria, their aspiration, what it is that they're hoping to achieve with this new home, I tell them whether I believe that's achievable or not. Just like I said there, that's not going to happen. And then sometimes we need to change the goalposts a little bit. Just change the goalposts. We might change them 1 kilometre or 2 kilometres or 1.5 kilometres. We might go a little bit north. We might go a little bit further west. And sort of engage and educate. I will try to educate people. Look, if you just move a little bit further out, you will achieve, I believe you will be able to achieve what it is that you're hoping to do. However, the Irish buying process is not for the faint-hearted. It is not easy, unlike other jurisdictions. And we don't really want to talk about the other jurisdictions because we are where we are. But other jurisdictions are really well set up in North America and Canada and Australia, and actually even in the UK it's pretty swift, whereby contracts are drawn up prior to a house going to the market. And in lots of cases, it's actually the sales agent who does the conveyancing side. However, we don't do that. And our conveyancing process, and I can stand corrected here. Are you the solicitor by any chance? No? I was wondering. Because I was kind of going, oh, Jesus, right, before I say something shocking. But look, it's a long, laborious process. And expect, I would suggest, and again I stand corrected, by the time you sign contracts and the keys are handed over, it can be anything. 8 weeks is an absolute miracle, and anything up to between 12 and 24. And that is it. And a lot of that is to do with title deeds being released from banks, and a lot of that is to do possibly with solicitors maybe not having your file at the top of the pile, which is I would always go, get me file to the top of the pile. Let's get this thing moving. And the Irish side, particularly in second-hand properties, this is where the psychological warfare comes in as well, because it's unkind in a way. It's unkind because you are quite vulnerable when you go into a house and you're having a look and you're thinking, oh gosh, can I achieve this, can I not? Just to go back to what I was suggesting, open house viewings are horrible. Like, it's horrible. It's a competition. And our bidding process is a competition for who's got the most money. That is in private treaty, second-hand sales is what I'm referring to here. Okay? And also we have a structure of valuation which is called the advised minimum value. So if I'm speaking to an estate agent on behalf of a client, I'll say, tell me about that valuation. What's the story with that valuation? Most of the time it'll be tucked under. It's tucked under 10% to get the likes of you guys into the room and to get somebody to start the bidding. Somebody start. And invariably, that property will likely go 10% above asking price. Now, the Irish psyche also is the psyche whereby we all say, I'm not bidding against myself. I'm not doing that, and I'm not going to bid first. And I go, why not? Somebody's got to start. What's the problem? There's no problem here. You can lowball a bid. Do you understand? Does everybody understand what I mean by lowballing a bid? Like, take, for example, let's just take €100,000, for example, and a lowball would be coming in at 50 or 60,000 euro. It's not going to buy the property. But somebody has to start. Somebody has to start the bidding. And my own thought process around this is like, go in strong, go in with intent, and show your mettle. And invariably it works. You don't hold on to your money, because all that does in a bidding process is actually slow the process down. You could tell us a bit about that, Dave, with the house you were telling me about that you tried to buy a couple of years ago. If you slow the process down, all you are doing is inviting other people to come to the party and start bidding. And it's actually the elimination game. This is the elimination game in second-hand property, by the way. And what I do on behalf of my clients is, well, back to the go for a bit. A lot of my clients, again, would have come to me because they've been unsuccessful. They've just said, it's too hard, we can't do it, we're upset, it's emotional, we don't like this anymore, you go do it. And I am taking on the bidding process on their behalf. So for them, I will source, I deal with all the estate agents, I make all the phone calls, I do all the viewings, I visit all the properties, I advise them on everything that I've visited. So, for example, I might say to a client of mine, well, how many properties have you bid since you got your approval in principle? They'd say 6. I go, 6? What? And how long? What? 5 months? What? I'd look at 6, 8 or 10 in a day, dependent on what's available to me. And I basically hammer the market and eliminate. And then I'll present a short list, or maybe even one, or maybe even none. Maybe I've got to go again. But generally speaking, there's one out there that's right. And I'm not always successful, by the way, may I also just add. I'm not always. Sometimes I lose. Like everybody, I got to lose sometimes. But there's always a solution. There's always another solution. There's always another property around the corner. Or something will turn up that's unexpected. And invariably, it's the right one. But for me, in terms of bidding, what I do is this. I'm giving away my model now, but sure I might as well. What I do is this. If there are 4 or 5 bidders at the table, and generally speaking, it's very obvious the way people bid. They'll bid in 1s or they'll bid in 5s. They'll bid in 1s or they'll bid in 5s. And we all go 100, 105, 110, 115, 120. I'm going, Jesus, this is boring. This is boring. And let's say the property is worth €115,000, or we're now taking the 15%, 10 to 15% above asking, it's very likely that the people who are bidding on this particular property, it's very likely that they can all get their hands on the same money. It's very likely that they're all pretty much mortgage approved at the same level and have the same amount of cash, unless they're getting a gift from their parents, right? So you have to strategically get rid of your underbidders. And if everybody's bidding in fives, it's very likely that the ceiling is 115,000 or 120. And most of the time, when you go in hard with what you can spend, you will eliminate your bidders. Believe me, you will get rid. I promise you. I have sometimes lost in a bidding war, which I hate calling it that, but that's what we choose to call it here as well. Sometimes I have, and that's when the value has really gone way beyond where this property should be. And that's something else that clients say all of the time, or buyers say all of the time. I don't want to overpay for a property. And the market will dictate the price of a property, and you guys are the market. You guys are the decision makers about that. It's not really the agents. They're tucking the price under to get you, to invite you to come to the table. And the market is you. And the market is cyclical, and the market changes all of the time. All of the time. Believe me, I've been through 3 recessions, and I had a few blips with my first business along the way, and I had to reignite it recently. I reignited my business in February 2020. And guess what happened? Along came COVID and said, "How are you, Liz? There's another recession here now for the next few years." And actually, it was a sort of a blessing in disguise. It really was, because a completely separate service came out of that, in that people couldn't get into properties. They couldn't get in. They'd seen properties they wanted to buy, but they couldn't get into the things. But actually, the property industry was an essential service. And agent to agent, I could get in. So I was saying, yeah, I'll get into that for you, but I'm sending you an invoice. And off the new story began. I just have my last page here, actually, and I've just said, just when you are out there bidding on a property or intending to bid on a property, have a little strategy. It's not rocket science. It genuinely is not rocket science. You just need a bit of confidence. You need to know what you're doing. And just know who's bidding. Do not be afraid to say to the sales agent, how many people are bidding on this property? Who are they? Do you have sight of their proof of funds? What's your sense of them? Do you think they're at the end game? Do you think they've got more money than me? Tell me. They're the questions I ask all the time. Who am I up against? What are the bids? And I have my little bidding book. I'm very old-fashioned, pen and paper. I have my little bidding book, and I have party 1, party 2, party 3, and I can work out exactly what's coming next. I know exactly what the next party's going to bid. We've got rid of them now. And I'll put in a dodgy old bid now that's going to irritate everybody. It's not on the nose. It's just going to annoy people. Something like €117,742. See how you like that? See how you like that? And it scares the bedams out of people. They don't like it. They go, oh, Jesus. Do they have money? Do they not have money? I don't know. And then they back off. And I go, yep, we're in. So work out your competitor's ceiling. And that's what I mean by that. Have your little bid book and write down the bids. And somehow your brain will just start to jump into action, and you'll start to kind of understand that everybody's just throwing away £5,000. They're just throwing them away, like they're putting them down the sink. Anyway, I don't know if I've given you any advice at all. Maybe a bit of a laugh. To round up, I'm sticking around, so if anybody wants to ask any questions, please do afterwards. And I would also say, and by the way, this is not just for myself, the vendor engages with the sales agent. So the vendor has a representative to act on the sale of their home. Why can't the purchaser have a representative as well? Why not? And my business is about relationships. My business is about me knowing every single estate agent in this city and beyond, and if they don't hit the ceiling when they hear my name on the phone, I'm doing something wrong. And it's taken me 21 years to gain this reputation. I'm not about to lose it, and they do hit the ceiling when I call. They go, oh Jesus, your woman's on the phone, we better talk to her. So there are other buyer's agents out there. There's plenty of room for all of us. It's a service that's absolutely required. You should not necessarily be out there on your own in a jungle or a fog that you really don't understand. Because Dave made a very good point at the top. He said, this is probably this is the biggest transaction of your life. You might do it once and you might do it thrice. That's it. That's it. It's not like buying handbags, girls, or boots, or going out down for the milk and the bread and the butter. It's not that kind of a retail transaction. This is something that people do not do very often at all, and it's mind-blowingly confusing. And I have dealt with first-time buyers with €250,000 to spend, and I've dealt with family offices with more money than we could all dream of, and everybody else in between. And everybody is the same. They don't know what they're doing. They don't truly know what they're doing. So sometimes a little bit of hand-holding and a little bit of reassurance is required. And actually, that's really what I do. That's what I do. I hold people's hands the whole way through this process. And I assure them that we will get to the end game. And I'm very proud to say I haven't failed yet. Okay? Thank you very much.
Oh, thank you very much, Liz. It's been very informative. In fact, one of the main reasons why we actually did this event tonight is because we have a large amount of our own clients house hunting, and it is a hunt. It's not, as Liz said, rocket science. It's a lot of perseverance. It's a lot of actually pounding the streets and actually finding, the right fit for you in terms of property. And believe you me, we have a lot of despondent clients losing out, getting very disappointed, and that because of the fact that they've lost what they think their dream house is. But unfortunately, it doesn't all happen on the first time around. In fact, we have clients probably with us nearly 2 years still trying to buy a house. So in terms of getting the expertise, like you're doing it for the first time, if you're first-time buyers, Liz's service that she's offering clients is just only brilliant, because the fact that she'll guide you through, she'll hold your hand in terms of any mistakes being made. We spend half the time on the phone with our clients trying to give them a bit of property advice. We're not qualified to do so, but they're asking us questions about, are we bidding too high in the house? Would you pay more for the house? And we're like, guys, it's your money. You have to do what you want, but if you're getting outbid and it's competitive out there because there's such little house stock in the market, I don't think, looking at DAF's report yesterday, the stock levels have actually changed in any time over the last 12 months. In fact, there's probably less coming on the market. There's a lot of landlords leaving the market as well, and those houses aren't getting lost to the rental market. They're going into private dwelling. So we'll move on to the next speaker. Sorry, we were supposed to keep the slides going as well. There's your logo, Liz. Sorry, we forgot to put you up. So the next speaker is Damien Woods of Jacobs Law. Damien's firm has been at the forefront of revolutionising the customer experience for conveyancing, and their clients' innovation, technology and unrivaled expertise and exceptional customer care is at the core of what they do. Their goal is for their customers to receive a conveyancing service that exceeds their clients' expectations. With over 25 years' experience, Damien's expert knowledge in conveyancing, mortgages and mortgage litigation, legal drafting, GDPR, regulatory compliance. So without further ado, I'd like to introduce Damien up to have a little chat on his slides.
Okay. Thank you. And it's been very engaging. I think Emer and Liz were both excellent. And my job, what I want to try and do is try and demystify the legal process. I think for people buying a house, they're probably terrified of dealing with solicitors and the legal process, and I've heard loads and loads of horror stories. It's not actually that complicated. So just by way of background, right, I have actually 30 years experience, which is terrible, in terms of dealing with property, and I have dealt over my time with thousands and thousands of property transactions. I teamed up with Stephen last year and we set up Jacob Law. Jacob Law is a digital practice. We deal with transactions all over the country. We meet clients digitally. So we have kind of broken the mold in terms of how transactions are dealt with and how we engage with customers. We deal only with conveyancing. We don't do anything else. We are experts in our field. We have a principle that you do one thing and you do one thing really well, and that's what we try and do in relation to this. Because of the fact that we do that, we bring economies of scale, we provide a good service, we do it at a very competitive price without sacrificing the service that we provide to clients. And that's kind of just by way of background in terms of what we do. Okay, so what I've done, we've divided the entire process more or less into 7 stages. I'm not going to go through. Emer has talked about the whole process of getting your loan. Liz has talked about the process of finding the property. And those are probably the 2 most important aspects of actually the whole transaction. I am just going to deal kind of with the tail end of it. So you get your property, you get your loan approval. When we act, if we act for a client, we won't let anybody sign a contract until they actually have their loan approval. If you're buying a second-hand property, you will have completed a survey at that stage, and the surveyor will have signed off on the property and give you a green light to proceed. If you're buying a new property, you obviously won't be doing a survey, but you will still have to get your loan approval. So once you have a survey done, you have a loan approval, second-hand property, you are in a position to proceed. So I'm going to tick through all of these. Okay, so once you have your loan approval, you have contracts, we check the title, we make sure that everything is okay and that you are in a position to proceed with purchasing the property. What I mean by checking the title is that we make sure that if you go to sell it in the future, you will be in a position to sell it, you won't run into any problems. When we do that, you have your loan approval survey completed, we meet you. For us, with conventional solicitors, you probably go into an office, you meet them. For us, we do it digitally, we meet you online, sign all the documents digitally, so you can be based in Dublin. We are located in Waterford. We deal with you online in terms of signing it. Up until you sign contracts, you can walk away from a deal, no matter how invested you are in relation to it. If you have a change of mind, circumstances change, whether it's between you or the vendors or whatever, you can walk away from the transaction. Once you sign a contract, you are obligated to proceed. And that really is the defining moment in terms of the legal process. It's also, and I think most people perhaps don't appreciate it, it's kind of the start of the end of the journey, because you have, at that stage, you have really done all of the hard work. You have gotten your approval, you've gotten your survey, the legal title has been investigated, and you're really looking at you can see the end line, and you're looking at the end line, and it's almost there. And it's just really a case of wrapping it up. Now, we divide properties essentially into 2 areas. You have your second-hand property and your new property. So once you sign a contract, I'll deal with second-hand properties first. When you sign your contracts, you should really be only a matter of weeks away from actually getting the keys and moving in. And that depends on the circumstances of the individual transaction. If the property is vacant, like David had mentioned, say for example, landlords leaving the market, they're keen to get the property sold. If you're lucky enough to be buying a property like that and you've signed your contracts, it is possible that you'll get in with about 3 to 4 weeks of signing contracts and your loan documentation. If it's a new property, you have no control over when you will get the property. The builders, to allow themselves scope to deal with different circumstances, and they got caught out rather badly during COVID. They have a condition in the contract that states that the completion date is between 18 and 24 months from when the contracts are signed. And despite assurances that you might get from the builder directly or from the selling agents or anything, this condition prevails, and you could be led to believe, in terms of buying a new house, that it could be ready in 3 or 4 months, and 6 months later, 7 months later, 8 months later, you could still be waiting for it to be completed and for you to move in. So that's just something to be aware of in relation to a new house. What we say to clients in terms of buying a new house is, firstly, if you're given a date, add another 3 months on. And this is important, I suppose, because if you're buying a house, you have to make commitments in terms of the property that you're staying in and so on and so forth. And you want to avoid a situation where you have perhaps assumed that the property is going to be ready more quickly than it actually is. And physically check the property if you can, and that is probably the best way of gauging when your new property, if it's a new build, is going to be ready. Sometimes you'll have restrictions in terms of getting on site and so on and so forth, but if you can, that really is probably the best benchmark in trying to determine when it's going to be finished. In relation to this second-hand house, solicitor dealing with it will be able to, having talked to the other side, will be able to give you a pretty definitive closing date. So they'll say, okay, we'll get this completed by the end of July. It more or less will happen when it's supposed to happen. There can be some circumstances that may lead to a delay of a few days or whatever, but that's it. In terms of the mechanisms, if it's a second-hand house, on the day of closing, what you do is you just go, you do a final inspection. If everything's okay, you get the keys. If it's a new property, what you do is you do your snag list, and if everything is okay and it's all finished, you actually complete it. And then you get your keys. That's the end of the journey from your own perspective. You go out, you celebrate the end of this long transition. From our perspective, and this is just kind of by way of background and to explain what happens afterwards, from our perspective, what we do when the transaction is actually finished is we then go and stamp the deed. I don't know if you have engaged with solicitors, if you made inquiries, but you all know that you have to pay stamp duty 1% in terms of the transaction. If you're lucky enough to be buying over €1 million, it goes to 2%. Stamp duty is a duty that's basically payable to the government. So, and it gives official recognition to the actual deed that you sign. It's stamped, and then the property is registered in your name within the Property Registration Authority. And that records you as owners of the property. When that is finished, the deeds are then returned to the bank, and the bank hold them as security for your loan. And it's only if you discharge the loan or if you're selling at some stage in the future that you'll get the deeds back. If you're selling, the deeds are taken back by the solicitors for the purposes of preparing contracts to sell on to somebody else. So you won't actually ever see the deeds, and in many cases you won't actually see confirmation of ownership. And what we say is that you should, when the transaction is finished, ask the solicitor, just for your own information, to send you a copy of confirmation that you're registered in relation to the ownership of the property. It takes, if it's a second-hand property, the registration is already there within the PRA, and it's simply a question of the officials within the PRA noting you as the new owners of the property. That happens pretty quickly. It takes between 3 and 6 months, depending on the registers. There's one for each county. If it's a new build, it can take up to 2 years. So if you do buy a new build and you are checking up on your ownership afterwards, don't be alarmed if it's taken a long time. It does take a long time. So that's kind of the tail end of the process in terms of buying a property. I just want to talk to you about the legal costs in terms of buying. Okay, so most of the costs are fixed. You know, no matter who you use or whatever, the costs in terms of stamp duty, registration costs and outlays are kind of fixed. Stamp duty, you know, about 1% of the purchase price. There's a little twist in terms of a new build. You will not have to pay VAT, stamp duty on the VAT aspect of the build costs. It's a little bit complicated. If somebody, say for example, is buying a property for $400,000 and the build costs are $300,000, that build cost of 300,000 incorporates VAT of 13.5%. So you will save a couple of €100 in terms of stamp duty in relation to that particular VAT amount, and it only applies to new builds. If it's a second-hand property, it's very straightforward. It's 1%. You have to pay registration costs. All properties have to be registered within the PRA. If the cost of your property is 400,000 or less, you pay €700 to get it registered within the PRA. If it's over 400,000, it's €800. You will be getting a mortgage to buy the property. You also have to pay a cost of €175 to register the mortgage. And if you're buying a new build, you will probably have to pay a sum of €75 for the cost of opening up a new folio. Okay? So these are all fixed costs that will apply in each and every transaction, and in terms of allowing you to factor them in. The next costs in relation to this are variable costs that are called outlays that are associated with the transaction. So we as solicitors have to carry out searches against you as a purchaser and against the property and against the people who are selling the property. It's to make sure that there's no hidden charges, things like, say, for example, vendors having judgments registered against them which could adversely affect the title. They're generally carried out throughout the process, at the time you sign contracts, and then at the very end to make sure that there's nothing that has crept in from the time that you have started until the time that you've finished. They cost about up to €200. You have to complete various declarations, to deal with family home, to deal with planning, and so on and so forth. You can pay up to €100 for those. And then you have postage and miscellaneous costs, which can vary, but you could allow up to €100. There's slight deviations and variations if you're checking them around. They will vary, but not that much. Use those figures as a good benchmark in terms of the costs. The main variation is in terms of solicitors' costs. And Emer alluded to this earlier on. You will find there's huge variations in terms of costs, right? Sometimes it can be a bit of a lottery. Sometimes solicitors will work as a percentage of the value of the property, which I think personally is unfair because it's the same amount of work goes into a transaction if you're buying it for 300,000 as you're buying it for 800,000. And some solicitors just have set costs, right? It is important to shop around, but because cost is important. This whole process is expensive. When you add all of this up, you add stamp duty and all of the costs. It's an additional expensive factor. But cost isn't the most important thing. And again, as Emer alluded to in relation to this, it is service that is important. And what I would say is that you go on recommendations primarily from friends that you know or people that have been through the process before, because this is the first time that you will have done something like this. And you need, again, as David had said, you need somebody on your side that's going to look after you and is going to be available to deal with any questions or queries or that you have in relation to it. And if you can't have that, it's very problematic, and it makes it very difficult and very, very stressful. And unfortunately, solicitors do not, in many cases, have a good rep in terms of how they communicate with solicitors. I think we do a good job as a profession, but I think on the whole, the profession is really bad at communicating with their clients. Okay, so when you go to make a determination in relation to a solicitor, find out what the total cost is. I say here is that you should get a total breakdown in relation to it, and use that as a factor, but also use, and I would say the primary thing is to use referrals or something like that to make sure that you have someone that's going to look after you and do a good job. Okay, so the next slide, there's some additional costs which are applicable in terms when you're budgeting. You will have to pay, if you're buying a second-hand property, you will have to pay LPT, which is local property tax. Local property tax is a tax that's on every second-hand property. It's paid in November of the preceding year for the entire of the next year. So local property tax for 2023 has been paid in November of 2022. So if you buy a property now and you were to close say today, which is the end of June, you will have to make a contribution towards the LPT payment as it has been paid for the entire of the year. So the example I give here is that if you're buying a property for 600,000, an LPT is 585. If you close on the 1st of July, you will have to pay an additional cost of 242.50. And then management fees in relation to managed estates. It's mostly apartments, but sometimes within estates, housing estates, you have a management company that looks after the common areas, the greens and the roads and so on and so forth. If it's an apartment, management fees can be very expensive. You can pay up to €4,000 for management costs. So just bear that in mind as an additional cost when you are looking for a property and then when you're coming to finances at the end. The same principle applies with LPT. If the management cost says €4,000 and it runs for the calendar year, if you complete the transaction the 1st of July, you will have to pay a contribution of €2,000 as an additional cost, in addition to all of the other costs that are applicable. Okay? So, now, how we operate in relation to this, and I think one of the things that we try to do, apart from the fact that we specialise and that allows us, as experts in terms of what we do, that allows us. I think that we've got a really good reputation in terms of communication with clients, explaining what goes on. We really empathise with clients in terms of this. We're very aware of the fact that this is the first time that you will be through a process. We know what it means, and we try to provide the best service that we can to ensure that it's simple and straightforward for you. We operate on a fixed fee basis in relation to it. I will come to that in a second. Just key points in relation to this. It's important to be informed. Don't ever feel embarrassed about asking questions. This is the first time that you're doing this. It is new to you. You should know what is going on. It should be explained to you step by step. Once you know what happens next, in relation to the model that we operate, is that we say, this is the current situation, this is what happens next, this is what you need to do, and this is the time scale in which it's involved. Once you know that, it will make the process easier and a lot less stressful, a lot less complicated. If you can, be relaxed. It will happen. There will be problems, there will be hiccups, but they will be sorted out. And if you're hitting a roadblock or that, don't get upset. These things will happen. There will be delays. Something will go awry. Documents will get lost. Somebody will have a hissy fit along the way. But they will all be sorted out. And if you can sort of take a little bit step back and that, it will make it easier for you. And then communication is really, really important all the way around. For everyone to try and keep everyone in the loop in relation to it, because you will have, during the process, you will have the estate agent, you'll have the mortgage broker, you'll have the vendor, you'll have the vendor solicitor, you have the purchaser yourselves, you have the purchaser solicitors. If everyone knows what's going on, I mean, so many of the problems that we encounter is because nobody's speaking to somebody else. There's a hiccup or something like that. If you can keep communications open, it does really, really make the process go an awful lot easier. And then do expect problems to arise. Problems will arise. Even the most well-run transactions, there will be hiccups. But again, as I said, they will get sorted out. So when a hiccup arises, don't get upset about it. It will be sorted out. Typical example is a closing date. If you have a closing date for a second-hand property, you're due to get in tomorrow, and then you find out today at 4 o'clock you get a call to say there's been a delay with the check or the loan, and it has to go off for another 2 or 3 days. Things like that. So just bear that in mind in relation to the process, and it will make it easier. Okay, so how we work in terms of this. We normally have, what we do is we offer a set fee. 2,700 is a fee that covers all of the registration costs, our legal fee, VAT, and all of the outlays that are associated with it. The reason that we opted for a fixed fee is that it makes it easier for you to work your budget out. So if you're buying a property for 430,000 with a fixed fee of 2,700, it's a straightforward fee of 7,000. That's the cost of the purchase, together with your LPT contribution and management charges if they're applicable. We have agreed that we will do a reduction of €300 for customers of NFP in relation to this for the seminar in relation. The only caveat is that if you're buying a property that's over 400,000, that goes up to 2,500 because of the additional increase in the PRA fee. And that covers it. I have to say, it's a very competitive fee compared to part of the advantage of what we do. Based on Waterford, we work remotely. Economies of scale kick in. We provide a very efficient service so that we can provide something that's very cost effective but without any distillation of service. We still can provide you with a really good service in terms of that, not without compromising it in terms of fees. Okay, and just so if you're interested in relation to this, you can go onto the website. There's a website, but there's also a barcode there. So, and I think we might have copies of the barcodes here. So you take a picture of the barcode and give you a direct link into the website, and you go on and you can start the process, register, and then we'll take a note of it. So if you do come back to us, even if you are only house hunting now, right, and you have nothing, you can come and you register, come back to us, and we will take note of it. One of the services that we provide as well for everyone, and it's kind of like what Liz said, we will, even if you haven't got a property, we will give you advice where we can in any situation to help you decide in terms of what you're doing, in terms of the property you're picking, and any legal issues that you may arise. So don't, we want to try and make this easy as possible for clients. So if you are still looking and you are interested, you can register and then you can give us a call at any time in terms of asking for advice or guidance in relation to any of the issues that you will encounter. Okay, so I think that's all. Okay, so thank you for listening.
Thank you very much, Damien. So I'd like to have Emer, Darren, Liz, would you mind to come up and we'll just do a Q&A for people at the front here. I'm sure everybody is dying to ask a few questions. So we're going to come to the final stage of this evening, guys, so thanks very much for your patience so far. I'm just adding another person on to for the Q&A, Darren Byrne. Darren has 18 years' experience in banking, previous held roles in Bank of Ireland, KBC, and Caledonia Imperial Bank. Sounds very, very posh. Darren's a senior mortgage manager in NFP for the last 3 years also. He's more popularly known on Instagram as Mortgage Man Ireland, with close to over 8,000 followers and rising by the day. Darren also has 2 weekly slots now in the radio stations, iRadio and Classic Hits, where he discusses all things mortgages. So we have a few questions that we got before this evening, and I'm going to actually give a microphone over. Guys, I'm going to ask just a couple of questions that we've been asked before the presentation. I'm going to open it up to everybody. So anybody who wants to ask a question, just put their hand up, and we'll field the questions there. So Darren, there's one for you here. Will all the banks offer me the exact same mortgage amount, or do they differ?
Differ normally. Each client is different. Each bank has different criteria. No two banks are the exact same. So just because Bank A is going to offer you one particular amount or maybe offer you cash back, etc., it's not the exact same thing that the second bank is going to offer you. Each bank has different criteria. I think that's the one important thing about working with a broker. Like, when you work with a broker, we should know the bank's credit appetite or credit policy inside out. We should be the first port of call that you sit down and talk to, and we should be able to present banks back to you about the best offer that you're going to get. So no two banks are ever the same, no two offers are ever the same, and guess what? No two clients are ever the same either. So each bank will offer something different, each client has something different to bring to the table. Does that answer that one?
Perfect. Good man, Darren. Damien, I have one for you here. Would you recommend somebody drafting up a will when they're purchasing a property?
That's an interesting question. Yes, I think is the short answer. Normally when a couple is buying a property, they buy it as joint tenants. Now that means that in the event that one dies, the property automatically goes to the other. And you don't need to do anything. It happens by what we would call operation of law. And it happens automatically. You don't have to notify anybody. It would only become an issue if you're going to sell it at some stage in the future. But having said that, making a will is good estate management, and if there's children involved, it's important to have a will to look after the children and to look after what would happen. In many cases, perhaps in a simultaneous death, both parents are killed in a car accident or something. So yes, it's a good idea. It's always a good idea to have a will anyway, not necessarily just when you have finished buying a house, but that's a good opportune time to do it because you're dealing with a solicitor anyway.
So what typical fee would you charge for a will?
Depends on the complexities. If it's a straightforward will where you're leaving it to the other person, probably will cost maybe about €200. If it becomes more complicated, if you're setting up trusts for children and there are lots of assets involved, it can run into a couple of hundreds to deal with a situation like that.
Thank
okay,
you.
No problem.
Liz, I have one for you. We hear these days on properties being bought off market. You hear estate agents talking about it. You hear people who are buying houses off market. Can you just give the people in the room here a little bit of insight what off market actually generally means when it comes to purchasing a house?
Yes, there are always some properties on the market that are off the market, okay, which means that they will not come to any sales portal, i.e. Daft and My Home, right? And that can be for a number of reasons. It might be a probate sale where you have a family who are upset and, they don't want the emotion of putting a for sale sign up. They don't want people potentially, going through mum and dad's home. There's that type of reason. The other reason could be for a sensitive family reason. The D word. Somebody's getting divorced and they don't want the neighbours to know their business. And they just want a clean purchase, right, where possible. And what other reason might there be? There could be a finance issue, again, and where potentially it's a receiver who's selling the home. And on occasion, rather than go to the market, sales agents will start making phone calls to who they believe might be able to potentially purchase that house. So I would get phone calls like this very regularly about off-market properties and or properties whereby the sale has not proceeded. Sometimes I can match a client to that property, which makes me look like a feckin' genius, and sometimes I don't. So, but if you get the call and you can match a property to a client who's waiting in the wings, yeah, happy days, happy days. But that's another question you should actually ask. Always ask it when you're speaking to estate agents. Have you anything off market, anything that's quiet, anything that's whereby the sale hasn't proceeded? Is there anything that you can tell me about that Daft or My Home are not telling me about? Ask the questions.
Beautiful. Thank you, Liz. Emer, I have one for you there. Basically, the question is, how long, I'd say this is from the time we engage with a client, how long would an approval in principle take to get? Now, I know this varies from bank to bank, so it's a bit of a loaded question here. So just give a typical average time it takes from the time you guys engage with us in terms of looking to get your mortgage approval.
Okay, so I suppose, just to initially cover off in terms of from the lender's perspective at the moment, if we had everything in to submit your application, you're typically looking between 1 to 4 weeks depending on the lender currently, but that can change depending on their turnaround times and their volumes. I suppose typically for getting, an AIP, it really depends on, on the applicant, number one, because obviously it depends on how quick you are at getting all your documents in. If there's any queries, if we have to come back to you, to get additional documents, or, if there is any, queries from the lender. So I suppose it can move as quickly or as slowly as you want, really, and depending on the lender you go with. So, if you were to have all your documents with me by tomorrow, I could have it fully assessed and submitted by the following day, technically. So then really you could have an AIP, depending on the lender, between 1 to 3 weeks. So yeah, it really is, I suppose, a hypothetical depending on the situation, but I would say between 1 to 4 weeks, really.
Yeah, we find generally, like with lenders at the moment, because one lender might be cheaper rates than another, they'll get loaded with application forms. So they'll give us a kind of a service level that they're, as Emer said there, it could be 1 to 3 weeks depending on the lender. Sometimes even last year, when a lot of people were switching, those went out to 3 months. So it really depends. Like there's really kind of more, of the 6 banks that are actually in the market now, there's actually 4 that are really kind of the busiest ones. And if one of them has the cheaper rates, everyone piles in to get onto the cheaper rates. So I'm just going to open it up. Does anyone want to put up their hand and ask a question? You at the back, do you want to get the microphone here? Sorry, thanks, Sinead.
Thank you. I actually have 3 questions. Okay. Thank you very much for all the presentation. It was very, very useful, although I'm still trying to get used to Irish English. So I have first question. If you're buying a new house and if you cannot live there yet, when you have to start paying your mortgage? Because it's hard like to have a rent and a mortgage at the same time.
Yeah, so I'll take this question if it's all right. So normally you will move in straight away. Normally you will take possession of the property when it goes through conveyancing, when somebody like Damien completes the deal. The only time that you wouldn't normally be moving into a house is if you need to do some renovation works. And that's the case where it can be expensive because you may need to seek additional accommodation while you're waiting for the property to be built. 9 times out of 10, you're going to try avoid that. You're going to try do the construction as quick as you can to get into your property immediately. Majority of property sales, once your mortgage is completed and drawn down, you get your keys and you move in. But to answer your question straight away, the second your mortgage is drawn down, 30 days later is when your first repayment is going to start coming out. So you're paying it from day one. You want to get the benefit of that. You want to get your keys, get into your lovely new home. So it makes sense to push it along as fast as you can. Does that answer that one for you?
Yes and no. So, because my question was more about like when the house is still like in the construction, so you're buying like a new apartment, and when you're buying it, it's like you can take it like you can have it like in 8 to 10 months. So for this 8 to 10 months, what do you do?
So you haven't drawn down your mortgage in that period. So all that's happened here is you've gone sale agreed on the property. You're waiting for the property to be constructed, but your mortgage hasn't drawn down until you physically take possession of it, until somebody like Damien turns around and says, yes, this property is ready to be moved into, ready to be taken possession, and it's built to a good standard. So those 6, 7, 8, 9 months you're waiting for that property to be built, you ain't paying your mortgage. You're still paying your rent. You're waiting to draw it down. You're waiting to take possession. Getting a little bit closer to the answer?
Yes. And can I have a follow-up question? So, for example, if you have this situation, then would the rates on the mortgage be the same, or it may change?
Ding dong, best question. I absolutely love that one. So, the honest answer is we don't know. If your approval in principle issues out today, and you're not due to draw down your mortgage for 12 months or 18 months, the bank is not going to give you the rate that it's promised you when you got your approval. If the market moves afterwards and it goes against you and the rates rise, the bank isn't going to be held responsible for that differential in the rate while you're waiting for your property to be constructed. So when you get your approval in principle, it's an indicative rate only. It's what the bank is saying, this is what we'd like to offer you folks, but we don't know when you're going to find your property. So when you come back to us, when you're gone sale agreed, when we're giving you the loan offer, that's when the rate is noted on it. And you will be given a period of time to draw down your mortgage on that guaranteed rate. So it's a tough deal at the moment. You're waiting for that new build property. You really don't know what that rate is going to be at the end. The idea is to try get through that process as quick as possible.
Okay. And if, for example, you were buying a house, would you go for a second market or first?
Oh, personal opinion questions, the ruination of my life. Okay. Look, if I was doing it personally, when I'm looking at the amount of government supports that are available, whether it's the Help to Buy scheme or the First Home scheme, it's very, very, very appealing to look at a new build property at the moment. Why? Number one is we don't have to mess around with this bidding war. It's you know exactly what that house price is. Number two, you're going to get a really good BER rating on the property. Everyone know what a BER rating is? It means the energy efficiency. So you're going to get something like an A or a B rating. Guess what? The banks reward you for that. So they will reward you with a green rate, which is normally a discount on the interest rates that they're offering to customers who have not got green rate mortgages. So my pull personally will be to new builds. I think there's a huge amount of government support there. I think it makes the bidding process there a lot easier, and I think I'm going to be rewarded going forward with my utility bills and the interest rate I'm going to be paid on the bank. But each person is different, folks, okay?
Okay. And the last question. Do you think that in the nearest future prices on the properties may go down?
Probably one for Liz, but I'm going to take a chance if that's okay. All right, again, more personal opinion here. I think we are a net immigration country. I think everybody's coming to Ireland to work at the moment. We're an English-speaking country in Europe. We've got some of the biggest tech industries available, paying lots of money to lots of employees. We haven't built enough houses for the last decade. So, number one, I think we've a shortage of that. Number two, I think there's so many people coming to Ireland with lots of high-paying jobs at the moment that it's going to keep pushing up these house prices. I don't think anybody in this panel wants to see a 10% increase per year in house prices. That's not sustainable. But what we wouldn't mind seeing is a tick up every year, maybe 1% or 0.5%. That's a bit more normal. To answer your question straight out, I don't think there's enough pressure to push the market back down. I think I can only see upward pressure coming on.
Thank you. That's all.
I promise we haven't paid her for all that questions, okay?
Hi, thank you so much for all the really useful information. I've got the advice that, so I'd be in the primarily second-hand market. So if I look at a property with a poor energy rating, I could potentially draw down on a green rate if I promise, or I don't know what is the legal agreement with the bank, that I say I do intend to do all the works necessary to bring it to an A or a B. So the question is that true? Can you get a green rate on a poor energy house?
You okay if I take this? I'm on a roll here. I'm afraid you've been misled. The bank is rewarding you coming to the deal with an energy efficiency property. As much as they trust us, they're not going to believe that we're going to do the work in the future. They're going to say, come and prove it to me now. Once you show it to me now, we'll reward you. If you go and you improve the BER rating afterwards, you are well within your means to go back to the bank and say, hey bank, I got my BER rating. Let's start to do a deal.
And if I'm on a fixed rate?
Dead right. It's at the bank's prerogative if they turn around and take you off that fixed rate and apply the green rate. If I was a bank, and we know how mean they are, I wouldn't take you off the fixed rate. I'd wait for your fixed rate to mature and then I'd reward you afterwards.
Thanks so much. If I just may, just a question for Liz. What kind of time frame, I think everybody's interested in time frames, at least I am, what kind of time frames do you see for bidding? So if I, obviously, so right now I'm considering a property and the last offer is very close to the asking price. So I'm assuming we're just at the start, which is unheard of really. I'm surprised with that property. Do they go on for a week, for a month, for 6 weeks?
So generally speaking, a sales marketing campaign is for 3 weeks.
3 weeks.
Generally speaking, it's a 3-week marketing campaign. Yeah. So you would have your first week of open viewings. Generally nothing will happen. The bubble might just start coming to the top towards the middle or end of week 2, and then bidding can take off fairly ferociously.
Oh, for the last week and a half?
For the last week and a half, and maybe into 2 weeks.
Okay.
So you need to be kind of week to 10 days, generally speaking.
Okay.
Generally speaking. Does that help you?
Yeah.
Because you kind of need to be all over it.
Yeah.
You know? Who's there? What have they got? Who are these people? What's your sense for, You know, how much money they got? Ask the
A lot of
question.
questions for my Saturday morning viewing.
Oh, I'd say. Yeah.
Thanks so much.
Not at all.
So I'm kind of like one of them people, like, I don't mind asking the nosy questions. So my question's actually for Liz, and like, you know, like, for example, there's a house on his mum's road we're like looking at the moment, and it's been empty for like a year and a half. Beautiful house, like done loads of work or whatever like that. Went onto the land registry, found your man's name, went to the CRO, found his address, wrote a letter to him, said, "Come here, will you sell me this house? Like, I love it. We've been there for 2 generations." And he replied, like, he emailed me back, to be fair to him, and said, like, "Oh, it's on a long-term lease with the council, so I don't know what they're playing at." But anyway, that's another story for another day.
Wow, interesting.
But I'm definitely not afraid to ask the questions. But the nut that I can't seem to crack is when we're driving around and we see massive developments. You know, you see the big signs that says, you know, development coming soon for 3 or 4 bedroom houses. Then you look it up and you realise they're already sold out. Like, people are buying them off the plans, whatever the case may be. How do I get ahead of that? Like, how do I kind of find out where those developments are coming so that I can be the one to buy them? Do you know that kind of way?
Would you like to come and do a bit of research for me? Because you'd be bloody marvellous. Anyway, listen, you need to call every New Homes agent, Savills, Hooker MacDonald, Sherry Fitz New Homes, D&G New Homes, and you need to ensure that you are on their register so that as soon as they get the green flag to pull the trigger and go on a new development, you'll get that email.
Okay.
Right?
We want to look at specific areas, so should
Yeah.
I let them know and say that?
Yeah.
All right, okay, cool.
Yeah, absolutely. And if you want to talk to me afterwards, I have the names of most of the right people to approach, and you just say, "Liz O'Kane told me to send you this email and you better do something about it," and they'll jump, I hope. Okay.
I think it's important, just on that point, what you were saying, trying to get ahead. If you see those signs up, there's always going to be a website, and register, even if it's like, meh, you know, because what happens is the houses don't get kind of big splashes launched, opening days, because they don't want, like where we had, I don't know, people remember like a couple of decades, or in the noughties where people were queuing out in sleeping bags outside houses. They don't want that, right? No estate agent wants it. It's just bad publicity for all of them. So essentially what they're doing is when you register on the website, you register your email details. Like, a lot of the estate agents don't even know from the builders when they're actually going to do a launch date. They're actually, it's like, put their finger in the air, they actually don't know. But when you register, you will get an email, like, whatever, how many other people have registered for those estates, and it's like, it'll be done on a Thursday, and then it'll be like a Thursday evening, and then a Friday morning, it's going to be launched, and it will be who's up first will sign up. So it's important, if you've feigning interest on an estate, maybe not the one you may go for, but it could do, register on it, because you won't get notification otherwise that the houses are being launched. It almost happens within 24 hours, because the estate agents will call the shots once the builder tells them that.
Could I just add something just very quickly to that? Always ask, are you having a wobble on any of those properties? Anybody not signed a contract? Anybody looking for their deposit back? Who's wobbling? There's always a few wobbles. Okay? I've bought several new homes this year because somebody had a wobble, and suddenly you're in there. Right?
Because you are free to walk away when you put your booking deposit down. Usually the estate agent will give you about 3 or 4 weeks to sign the contracts, and if somebody decides to change their mind, the deposit gets paid back. That property's on the market, and it's a bit of a headache for an estate agent because he's missed the first rush of people buying. He has to market it out. So there's always going to be fallers. You know, there's always going to be at least 1 or 2, because they might have their registration on another 3 estates, and they're going to go, actually, we got one on this one, so we're going to let that one go. So patience, perseverance, that's what we're finding at the moment. So you have a question there?
Yeah, my question, I don't know if you guys can answer, but how time look at probably work. So what resources are available when it comes to grants? Maybe I don't know something. You hear loads of them, they're not all available to everyone, but yeah, can you give some insight into that?
Yeah, so there's a couple of schemes that came available last year now at this stage, or even this year. Genie Mac, the months are flying by. So second-hand properties, you're not going to get the first home scheme, you're not going to get the Help to Buy scheme. But the three schemes they have in place, number one is your vacant property. So vacant property, if nobody's lived there for 2 years, up to 50k, it's going to help you renovate the house. If it's derelict and vacant, that can go up to €70,000. So definitely going to help you out there. So really, if you think about it, nearly outweighs the Help to Buy in the first home scheme. You also have the retrofit grant that's there too. That will give you back 50% up to €50,000 to help you improve that BOR rating, to get that improved for you. So it support's there for second-hand homes. Like up until, we'd say, a year ago, you really only had the Help to Buy scheme. I'm no fan of the government, but I will say one thing to Darragh O'Brien. He's the only minister to actually bring some support to the market to help you. Now, if he could build another 100,000 houses, that would be fantastic as well. But there is definitely supports there. So vacant property, your derelict grant, and then your retrofit grant.
Perfect. Thanks, Aaron. At the back there.
Just curious, does the mortgage process change for someone looking at a self-build?
Oh, a little, to be fair. So self-builds can be, it's the only property that you actually, it's the only deal that you have to go to the bank with, that you have to have the property in place. So it's going to cost you money to nearly actually bring your application to the bank. You're going to need your planning permission. It's going to cost you some money. You're going to need to get costings from a builder. So he's going to have to come out and tell you, look, this is exactly what it's going to cost here. You'll have to have your OSI map. And guess what? You're going to need a bit of land to actually build this on as well. So there are your 4 additional requirements you're going to need to have in place before you go for your mortgage application. So normally if you're just searching for a house, it doesn't need to be property specific. But if it's a self-build, you've got to have the house there in place. But afterwards, it's pretty much the exact same process. The only difference with a self-build is if me and Emer buy a house tomorrow and the house is already built, money is dropped into the solicitor's account, it's paid to the seller, we get our keys. With a self-build, it's dripped out to us through the build or through the construction process. So you don't get all the money up front. It's really the bank ensuring that you're actually constructing this property with the money it's giving you. So same process, just a little bit of work up front.
And is there much more to it than if you had the 4 in place? Like, going forward, is there any more requirements? Like, is there more of a deposit required? Is the land taken as a deposit? Or
it depends which bank you look at. So if we take the land taken as a deposit in the first place, yes, some banks will take it as a deposit. But normally if they take that as a deposit, they're going to make you have an extra deposit to cover something like your overruns or something like that. So you're always going to get it back regardless. The difference, I'll say, with self-builds versus purchases, if you're buying houses, although as a first-time buyer you can borrow 90%, really as a self-build it's nearly 80%. Because by the time you have your 10% there for your own deposit that you're putting in, another 10% to cover any overruns or costings or any construction prices that you didn't see coming. So you're nearly talking a 20% deposit. But other than that, it is a very similar process to a purchase. Just the money's dripped out to you. You also need to work with a couple of more professionals like that architect or engineer or QS. So it is a little bit costly up front.
Perfect. Yeah, we'll take 1 or 2 more. And don't forget, guys, we'll all be staying around here afterwards if you want to approach us with other questions as well. Just conscious of time. So we'll take 1 or 2 more if that's okay. And then we have a draw coming up very shortly. Do you want to go ahead, Eduardo?
Yeah, this is following up her question. In terms of new properties, it's a race, it's a hunting. It's frustrating for a person who is new to this. You know that. The sales agents know that. They can smell it when you are new to this. So how can you ensure some tips and tricks to verbalize that, hey, I'm ready to go. AAP approved, Help to Buy approved, proof of funds, ready to go, but there are more people in the same situation. How can you ensure to be on the top of that team?
Well, this is what I was saying earlier. You might have, I don't know if you remember, but I said the likelihood is that almost everybody in this room can get their hands on the same amount of money. And that's why it's so shockingly competitive and very, very difficult. There's no hard and fast rules, I'm sorry to say. I mean, I think you're talking about primarily new homes. Is that right? Did you say? Yeah. You just need to annoy everybody. You just need to annoy everybody. Now, unfortunately, I mean, if we're talking about Dublin and Dublin surrounds, we're incredibly far behind since COVID in terms of where we need to be. in terms of construction and the number of bills coming through. I don't know how. We're about 30,000 a year behind, something like that, isn't that? Yeah. He knows everything.
Which is crazy. Like if you look at we've some analysts out there reckon that we should be back building the 60, 70,000 units that we were building back before the last crash. Like our population was a lot less then. Like if we have more population now and more people are coming to the country, there's a notch out that we need to have more homes. And the biggest problem that drives me up the wall is these bloody investment firms that come over and buy up your apartment block and then it's rented out. But because the funding model is broken in Ireland, the banks are not lending to the developers have to go out and chase the money somewhere else. Guess what, where they're finding it? From the pension funds. So we need to change the funding model before the property is going to start changing.
Just in terms of yourself and where you might be hoping to purchase, sometimes changing the goalposts is not a bad idea. Just changing the goalposts a little bit. I do have clients who chose to move to North Kildare, for example, on the train line, primarily because they had the option to be in town 2 days a week and work from home 3 days a week. And there is a little bit more choice, there's better value, and all of these areas have growing amenities. I mean, I have to say, some of the places that these people have chosen to live are just super. Small national schools, great GAA clubs, really nice communities, and it's not necessarily all about Dublin. It really isn't, if you're willing to have that conversation.
Thanks, Liz. Anybody else want to ask a question? Yes, yourself.
This one I have to buy scheme. When do you actually apply for that? Because it's not clear on the way.
Now, if you can take anything from this tonight, go home and do it. That's the first thing that you can go home. Pop onto Revenue where you go and get your P60 and you can see all your tax documents for the last 4 years and apply for it. I'm always about getting these schemes, knowing exactly how much I can borrow or get support with from the government before I do anything. Because guess what? It's going to allow you to put a plan in place. It's going to allow you to budget, what Emer said earlier. It's going to make things a lot more realistic for you when you can see what's on offer. So absolutely pop onto Revenue, get your approval from Help to Buy. That approval stays valid for 6 months. What's the end of the world? It expires. You reapply again. No issues at all. You can apply as many times as you want. While you're in there too, have a look at the First Home Scheme at firsthomscheme.ie and pop in to see if you're eligible for that as well. So apply away, folks. No harm in it at all.
Like the max in the Help to Buy scheme is 30,000 and it's basically calculated, as Emer said earlier, on the last 4 years tax that you paid to the government, right? So like if you've only been working in Ireland for 3 years, you may not get the full 30,000, but that doesn't stop you the next year applying again, and that will increase hopefully up to the max 30,000 that they'll give. So you can apply now and it'll tell you what the figure is there. And don't be afraid when you're buying a house, if it's a second-hand one, to Help to Buy doesn't apply. But don't be afraid to actually, I tell every first-time buyer to apply anyway, so at least they know if they see a house that they want, they've 30,000 to play around with if they're going to buy a new build. So ultimately, you don't have to take the money. It's there for you. If you decide you're going to buy a second hand and not take the Help to Buy, that's absolutely fine. There's no terms and conditions. Once you apply, you have to take the money. And the simple calculation of how it's done, basically the Help to Buy is a calculation of a tax refund that the bank are giving, the government are giving you from the income tax you've already paid. Okay, so I'm just conscious of the time, guys. I just really appreciate, first of all, the panel, obviously, for their time this evening, and also, most importantly, for you guys to come this evening. And I know we went a little bit overboard in time-wise. We're going to stay around this evening, guys, and we're obviously have your details. If you want to reach out to us, we'll share the slides, etc., with everybody here. And there's a lot of advisors on my team here in the view. If you want to talk to them here, you can now, or arrange an appointment later on, whether it's next week, whether it's next month, whether it's next year. Engage with us, and we'll actually hopefully help you on the way. So, without further ado, we're going to do the draw for the Arnott's Fair.
This is me. I get up again here, to be fair. So I've never actually called out the names for a draw before, but I imagine the idea is you start with the runners-up and you work up to the main prize. Is that how it works? Well, that's what we're going with. Guys, forgive me if any of these pronunciations are wrong, but the first one's nice and easy, so congratulations to LOD Crystal. You have got an NFP goodie bag. I genuinely feel like Ryan Tuberty now. I better not have to disclose my salary here. So Stephen Dunn, you're next in line for an NFP goodie bag. Congratulations. Forgive my butchering of this name now, but it is Anojode Matra. Congratulations, sorry about that. Probably not going to be much better here now either, but Anje Nar. Oh, I'm doing okay here. And Stephen Patrick, you're our last runner-up. So for our first prize tonight, 300k, absolutely not a 300k. Where's my compliance? But she's waving at me frantically at the back. So €300 voucher, and it actually goes to somebody I was talking to earlier. So I think he deserves this. To be fair, he's come all the way from Leixlip. His partner wouldn't join him. Made him come all the way up by himself to get all of this information. So Rod Ernies, congratulations, €300 voucher. Well done. That's it, folks. We're all done and dusted. Thanks very much.